The first Bitcoin-related ETF is launching in the United States today. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewiton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Very exciting day. Very exciting day ahead of us. Day. Let's take a look at Bitcoin. The CoinDesk Bitcoin price XBX index currently trading at $62,120, shooting up there almost 3% over the past 24 hours. And the CoinDesk Ether price ETX index is at 37.90. ETH is also charging ahead about 1.4% for the day. And the new DFX CoinDesk's DeFi index is at 597, trying to cross that $600 threshold. It's up almost 2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Emily, Lawrence, we're going to have the launch of the first Bitcoin futures ETF by Proshares on the New York Stock Exchange, and a lot of volatility in the markets right now, Lawrence.
Yeah, I never want to hear another person say anything about, if only we had a Bitcoin ETF. This is it. This is the day, everyone. Yeah, you have people who are going in now, and this is, I guess people are going to decide whether or not they're going to sell the news. But this is
Emily, your take on what are you watching out for?
Yeah, so I mean, this is the ETF is kind of like this unicorn in the crypto world. I mean, people have just been talking about it for years. When are we going to get an ETF? When are we going to get an ETF? And yes, that day is finally here. Now, not everybody is happy because it is a futures ETF. It's not a spot ETF, but it's hard to overstate just how significant this is for the industry as a whole. It definitely is a mark of credibility, and it's a sign of some degree of regulatory acceptance. So it's a big day.
Mm-hmm.
It was a white paper just 13 years ago.
Right.
If that, yeah.
Putting it into context, zooming out, Laura. Yeah, no, it's very true. But there's still, improvement to be made. I mean, we could, have a Bitcoin spot ETF, and that would be more of a direct comparison to the price of Bitcoin. So we'll see. But what does a Bitcoin futures ETF trading in the United States mean for the crypto industry? Well, diving in with us is Preston Byrne, partner at corporate law firm Anderson Kill, to discuss. So welcome to the show, Preston. What is the significance of this moment, having a Bitcoin futures ETF launch on the New York Stock Exchange for trading following 8 years of rejection by the SEC?
Well, the significance of it is that it's the beginning of the long march of Bitcoin through the institutions. To date, Bitcoin has been a product which isn't the sort of thing which is traded in retirement portfolios. It's something which is traded on spot exchanges or on kind of funky derivatives exchanges and peer-to-peer. And this is really the first step in what I expect is going to be a decades-long pathway for Bitcoin to be regularized in the financial system and financialized as other products before it have been.
Hi, Preston. So, as you know, there's some disagreement within the crypto community over how big a deal this is just because it's a futures ETF and not a spot ETF. And I've heard kind of two different schools of thought here. One is saying, whatever, it doesn't matter. It's an ETF. This is great. We're where we want to be. And the other is no, this is actually a consolation prize and it's going to make a spot ETF just take even longer to arrive. What is your take?
I tend to take kind of a long-termish view. I don't day trade Bitcoin. I stack it for full disclosure. And really it's just a signpost along the way. It's just an indicator, another marker. It's one less thing that needs to get done before there is a spot ETF. So I don't think it's necessarily a bad sign. It's almost certainly a good sign. And I think with sufficient passage of time, we will get a spot ETF. We just aren't there yet.
So, Preston, good to have you on. What role do stablecoins have in the reasoning for not having a spot ETF? Do you think that the SEC is reluctant to do a spot ETF as long as the report on stablecoins is yet to come out? Do they have a concern about the effect of stablecoins on the spot market that's enough for them to say, you know what? Well, let's let the CFTC regulated on the futures exchange, and we'll just put out a product related to that and not have direct ownership of it, if you will.
I think that's right. I think there have been some allegations made in various civil lawsuits about certain stablecoins, which shall remain nameless at this juncture, being used for the purposes of market manipulation. Um, so sorry, not gonna cross that line. But there are some lawsuits.
It's hanging by a thread.
Yeah, and so the question, I guess, from the regulator's point of view is, can they effectively police, the spot Bitcoin markets if there's potentially some massive fraud activity which is happening alongside? At the moment, I think it's unclear. We know that certain stablecoins have been implicated in certain unlawful activities, and certain stablecoins have been fined for being involved in certain unlawful activities. But whether I think that's sort of a threshold issue which the SEC is still investigating. So that, yes, I think stablecoins do play a role into this, but it's one of many different factors that I'm sure they're considering.
Speaking of which, I know you have a CoinDesk piece coming out about decentralization theater. That is, a lot of DeFi platforms are saying that they're decentralized, but only for some, but not all of their components. So maybe a project could be decentralized. Well, I wonder, so can a project be considered decentralized for legal purposes? And what does that mean in terms of the outlook for regulation?
Yeah, so a project can be decentralized for legal purposes. The important thing when you're looking at a project from a sort of legal advice point of view is you look for the particular points of articulation where a regulator is going to be able to press down and apply pressure on the project. So does this project have a user interface? Does this project have an oracle which is run off chain, which is run by a private company? Is there an individual group of individuals or an organization who are effectively able to exercise control over the project in spite of the fact that the project claims to be decentralized? So that was the old way of doing things. And we've seen with a lot of there are some rumored, again, I'm not going to name names, but there are some rumored enforcement actions against a certain decentralized exchange relating to presumably operating an unlicensed exchange. And the outcome of that is TBD, but it's easy to see where, for example, if there's a web server being run by a company that's providing a service, even though there's a blockchain at the back end, the web server is where the regulator is potentially going to apply pressure. So what we're seeing now is a migration away from that onto client-side offerings that are run locally on users' computers. And a lot of these are just prototypes at the moment, but that's what's coming next. And that presents a real regulatory challenge.
So, Preston, speaking of unmentionable exchanges, do you think that some of them are using this sort of theater, this decentralized theater, to skirt authorities potentially in other countries that have single-party rule over a billion people?
If there is a country which has a single-party rule over a billion people, as far as I'm concerned, breaking the laws of that country to provide information and services to the citizens of that country is not only a legal obligation, it's a moral one. So that's my view on that.
Preston, I want to just return to the ETF for a second. So I'm just curious if you could just tell us how you see this in terms of the big picture of U.S. regulation, because over the few months, the SEC and the U.S. in general has been criticized for being kind of slow on regulation, kind of risk averse. There is this whole fiasco with the infrastructure bill. Does this ETF signal a kind of regulatory friendliness or inclination toward regulatory friendliness on the U.S., or is it just not that significant in that aspect?
It signals that they finally caved after having the crypto industry bang on the door for 7 years straight, saying, "Please give us something that's exchange traded and Bitcoin related." So I think it's a signal in that it indicates that it's the first step of many in the eventual financialization of Bitcoin, cryptocurrency, and related products. For example, mining-backed bonds or things like that. So there's a whole range of financialization we could do at various pieces of the crypto stack that just hasn't been done. Because of the discomfort with market participants and the regulators with Bitcoin-related products. So this is really the first significant instance where they've said, listen, we're willing to overcome our doubts in order to permit this thing to exist. So it's a good sign. I think it's an unalloyed good sign. It may not be as fast as anybody wanted. It may not be a spot ETF, which is what most people wanted. But it's a step along the way, and it was a necessary prerequisite for those things to occur.
One other, in the news kind of story going on is Celsius Network and Nexo. They're under a cease and desist order from the New York Attorney General for selling unregistered securities. Also, Celsius CEO Alex Mashinsky has come out saying that he has been lending out Tether, or rather Bitcoin, in exchange for Tethers, which is against, I suppose, the lending agreements that people understand from Tether, that they would not do Bitcoin-backed lending in terms of they would rather accept dollars instead. So I guess out of these cases, I'm wondering why is Celsius Network and Nexo being targeted in New York? And secondly, with respect to the Tether, any revelations that come across that strike out to you that Tether may be lending out to platforms and issuing Tether for Bitcoin rather than dollars?
Yeah, so I'll deal with the first question first. So Celsius and Nexo, without being, I'm familiar with the filings. I haven't actually read the cease and desist letters that were sent out. My hunch, if I had to guess, is that the New York Attorney General probably says, well, you need a virtual currency business license to operate in the state of New York. And I'm pretty sure Celsius doesn't have one. But in addition to that, there's presumably a securities element as well. And we've seen this with Coinbase Earn. We've seen it with Celsius. We've seen it with BlockFi. These yield-based or yield-earning products, which are being sold by these companies, are deemed by several states, and in my opinion, likely by the federal regulator, as securities or investment contracts. So the regulator says that you can't really sell those unless you actually have a registration statement in effect in relation to that security. So that my guess is, again, I haven't looked at the filings. I'll have to double check, but my guess is it's a bit license issue and a securities issue that Letitia James has brought up. In relation to the second, Tether and loans, Tether is one of those rabbit holes which you can go down, and there are any number of conspiracy theories about how this site operates or not. What I will say is that the critics of the site have been fairly well over the target for the last couple of years in terms of their assessment of the situation. And Tether keeps getting egg on its face with settlement after settlement after settlement. So I'm not sure about the specific facts of Celsius Tether, but it wouldn't surprise me that Tether was engaged in Bitcoin-backed lending if they, to the extent that they haven't given full 100% absolutely transparent disclosure about what their holdings are. That leaves open a question mark, and that question mark can include anything. They could have Bitcoin, Marmot coin, a pile of rocks, whatever else they could possibly fit in there. As long as they can mark it to a certain price and then say Tethers are backed, unless they tell us more about what's in the pool. There's a question mark there, so it wouldn't surprise me if that had happened.
Mm-hmm. More transparency, more disclosures. All right, Preston, thanks for joining us. That's Preston Byrne, partner at Anderson Kill. He's participating in Policy Week at CoinDesk. All week long, coverage at CoinDesk will focus on the crypto industry's reckoning with regulation. Preston's article is on the subject of decentralization theater, being published this morning on CoinDesk.com. All right, coming up, checking in on Asia and the crypto markets update with financial publisher Marketgauge Group.
The new infrastructure deal, we thought it was going to just be about choo-choos and fixing roads. Turns out there's a whole thing about crypto in there.
Basically, they're hoping to raise $28 billion to help fund other aspects of the bill. And the expanded definitions seem to be the main cause for concern amongst a lot of the folks in the industry.
For this new innovation that we not apply 90-year-old statutes, which is effectively what we have.
We've been talking about it for a number of days. This is a subject that very few members of the Senate know about.
I think there are a lot of others at the SEC who do understand the technology quite well.
Every time we take a step forward to regulatory clarity, what we see is market movement.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Justin Solomon of Forecast News.
Welcome to the daily forecast, October 19th, 2021. I'm Justin Solomon of Forecast News, covering all things blockchain, filling in for Editor-in-Chief Angie Lau. Just last month, China stepped up its crackdown on cryptocurrency, banning all transactions, including those made on crypto exchanges based outside the country. But that hasn't stopped people from trying. We'll take a look at how Chinese crypto users are finding ways to carry on as usual, and a lot more coming up. Let's get you up to speed from Asia to the world. First up, where there's a will, there's always a way. In the case of China's cryptocurrency transaction ban, that has seen people attempting to register overseas companies in order to bypass Know Your Customer checks. Forecast News' Timmy Chen takes a look.
Despite China cracking down on crypto activities with all its might, some users have been getting creative. Beijing Business Today reports that moves by more and more crypto exchanges to stop registering new customers and phase out existing users has resulted in investors making efforts to register companies overseas, which could allow them to trade crypto as corporations. And that has seen business opportunities emerge for intermediaries, with many vendors on China's major e-commerce marketplace, Taobao, which is owned by Alibaba, offering such services. A customer representative at one vendor told Forecast News that it has had clients successfully make crypto investments via an overseas company registration. The vendor says customers can register companies in the British Virgin Islands, Marshall Islands, and the UK, with fees ranging from 1,800 to 7,800 yuan. That's around 280 to 1,200 US dollars. For the UK and BVI, the process takes just 5 to 7 days, while it takes 8 to 10 days for registrations in the Marshall Islands. For Forecast News, I'm Timmy Shan, Taipei, Taiwan.
Meanwhile, the crypto mining outflow from China to the United States continues. Crypto mining giant BitMining has announced it will cease all operations in China and invest in Ohio. And Singapore-based Atlas Technologies Group says it is expanding its cryptocurrency mining operations in the United States as well. Forecast News' Michele Lim has the details.
Atlas Technology has signed a multi-year deal with US-based cryptocurrency mining infrastructure provider Compute North. It will see Compute North providing over 100 megawatts co-location capacity for Atlas in the US, enough to power a small city. Atlas told Forecast News the US offers security for businesses like theirs.
You have a lot more protection to be able to do this type of business here. Also, some of these states, such as Texas and New York, offer some of the most competitive and cheapest power rates in the entire world. So a lot of renewable energy is available here. Solar, wind, hydro, we have an abundance of that here.
Atlas is also exploring expanding into Europe, South America, and Africa to capitalize on the availability of renewable energy. But Hex says the strong economy and abundance of power in the US is still a big draw for many players. For Forecast News, I'm Michele Lim.
And finally today, in what could set a new precedent in Australia, ANZ Bank has settled a case brought by a Bitcoin trader. Alan Flynn claimed he had been debanked because he operates a digital currency exchange. Most major banks in Australia have denied instances of debanking crypto firms, but the issue is a hot topic, forming part of the Senate inquiry into fintech regulations remit. Forecast News' Lachlan Keller reports from Melbourne, Australia.
Flynn shared a statement from ANZ on Twitter in which the bank said it acknowledged that the closure of his accounts could have amounted to discrimination, and is not the only debanking claim Flynn has lodged. His second, against another of Australia's largest banks, Westpac, will be heard later this week. While Australia's banking sector has long denied allegations of the practice, there is a growing list of complaints from the crypto industry that they are being unfairly targeted. Singapore-based global payments unicorn Nium told a recent parliamentary hearing that Australia is the only country of the 40 in which it operates that it has been debanked in this way. A member of the board of Blockchain Australia told Forecast News he's hopeful Flynn's actions will push the conversation forward.
The fundamental issue is this myth of digital assets being all about money laundering or crime use, and banks don't appear to be spending a great deal of time educating themselves, but are in a position where they're able to now.
The Senate Select Committee's third and final report is due by the end of the month. For Forecast News, I'm Lachlan Keller from Melbourne, Australia.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index currently trading at $62,617. Bitcoin is up about 3.3% for the day. And the CoinDesk Ether price ETX index is at 38.22, making an advance of about 2.3%. And the new DFX CoinDesk's DeFi index is trading at 598, creeping closer to that $600 threshold now, just up about 2% over the past 24 hours. Joining us now to discuss the crypto markets is Michele Schneider, Managing Director of financial publisher Marketgauge Group in New Mexico. Hello there, Michele. So I guess one question out there I have for you is, are you going to be buying into this Bitcoin futures ETF that will be launching today?
Not today, for sure, but that's my style. With every IPO or any new issue that comes out, we're never like to be the first ones in. So I like to look at some historical point, not to mention the fact that if we're looking at Bitcoin itself, even though the price is very exciting here, it also is into some resistance at the all-time high. And as a technical type of trader, I like to look at both sides. So we could blast through that resistance and keep going. Maybe that would make me more interested in BITO. But at the same time, it could also be some giant double top. You have to have an open mind here. So first one out? No, not us. But nonetheless, there's so many other things to do in this space, in the whole cryptocurrency mining space, that NFT space. This is really where we have our focus right now. And this, to me, represents how much there is to do and will continue to evolve as we move along here. Oops, I'm not hearing you. I'm sorry. Lawrence, I can't hear you.
There are some companies out there that seem to loaded up on Bitcoin on their balance sheet and acted as if they were an ETF. Now there's an ETF on the market. Is now the time to sell those companies with their little bit of premium and their idiosyncratic risk there, and buy the ETF? Is there a trade to be had in selling one and buying the other?
You mean, like, for example, selling MicroStrategy and buying BITO, that kind of thing?
Maybe. Maybe.
Well, right. I mean, it's not something that I had explored. I mean, it's interesting, though, you bring up something, considering we're looking at it the way we're looking at commodities futures, where you would do spread trading, where you would be long one thing and short another. It's possible that can work out that way. At this time, they seem to be more correlated. MicroStrategy has gone crazy, has all of the companies that are related to cryptocurrency right now, including the mining companies. So I wouldn't be so fast to do that, but it would be interesting, I think, to watch for potentially.
Michele, some people have been critical of this Bitcoin futures ETF, saying that it's a bad investment compared to a spot ETF, because there are many other ways to buy Bitcoin. One of the arguments people bring up is this risk of contango bleed, and which I'm sure you're familiar with. But I'm just curious, do you think a Bitcoin futures ETF is not a good investment? I mean, given that there are so many ways to buy Bitcoin at the spot price.
No, I think it is a good investment. As I said, though, I think you need to see the dust settle a little bit here, particularly as we're saying the prices of everything, including Ethereum, are right now into this resistance, particularly Bitcoin, again, being near its all-time high. So I would look at it more from that way. But if you are a technical trader, there are two ways to look at things. When you break through these big barriers, which we could potentially do with Bitcoin right now, then you have a momentum trade. And as a momentum trade in the futures market, you can go parabolic pretty easily. So I think that people should have some idea here, if they're going to get involved, not to stay aside, but to actually even understand your risk. And the best way to look at risk when you don't have historical price data for this new ETF is to look at the coin itself. So what do we know? We know that 60,000 is probably a really good pivotal point right now. And that if it gets through 64, 65, it can go to 75, 80 easy. And if that's how you trade with some basis of knowledge and some basis of risk reward, then you're going to be good to go.
So what tells us if this is a successful launch of an ETF? At what point do we say, okay, this worked out, this is the future, this is Bitcoin's bull moment? Or how much in assets have to go into it before we could say this actually worked out for Bitcoin?
Well, I think, as I said, coming out of the gate, with any new IPO, I like to give it at least a week. So if we get good volatility and good liquidity and we develop some kind of ongoing interest and we see the coin itself continue to move up, then I think that would probably be enough evidence. But look at something like Coin, actually COIN. That took a while. It launched, it did well, it crashed, it found a base at around 200, and now it's trading over 300 today. So if you're just patient enough, that's where this historical price data and also seeing some volume will be interesting. I mean, this may sound a little silly, but I'll be also interested to see what Cathie Wood wants to do here, because she was an investor in coin all the way down because she believed in it. It'll be interesting to see if she expresses any interest or buys anything in this new ETF.
Michele, this has been such a hotly anticipated event, and there have been some analysts warning about buy the rumor, sell the news. Obviously, that hasn't happened yet, but is there a danger of that? Is there a danger that we could see some sort of steep drop off in Bitcoin after some of this hype wears down?
Well, of course, because everything cycles, and that's particularly volatile. And as we mentioned in the very beginning, we are into some resistance here with people who look at yearly pivots looking at this area as a potential double top. So you have to be aware of that. But it wouldn't necessarily be the thing to scare you from doing it. Like I said, as long as if it clears this resistance, it keeps going up. And, you know, you had mentioned before earlier in the show, I was listening about a spot ETF, and I think GBTC is considering that, the grayscale ETF over-the-counter GBTC. So that would be something to look for. I mean, Valkyrie is coming out on Wednesday with an ETF that is, interestingly, BTFD, which is very funny. So it's just going to continue. So I think the bigger issue for people is going to be focus. What do I focus on? I know I'm going to have that issue because it's like a child in a candy store right now. There's going to be so many things to look at besides the companies like Lawrence mentioned. Riot's up today, for example. We actually got into Overstock because that also has a Bitcoin relativity to it. And also right now it clears some congestion. So I think it's going to be a matter of what do you focus on? You want to buy HUD or Hive? You want to buy BITO? You want to buy this new issue that's coming out potentially with Valkyrie? Do you want to actually stick to the coins? Do you want to expand from Bitcoin and Ethereum into just blockchain technology? Do you want to look at XRP or Litecoin or these other things? So I think it's going to behoove investors to try to figure it all out. And the other exciting thing, by the way, I just want to mention is Interactive Brokers is now expanding crypto services to their RIAs.
Oh, Michele, we're just going to interrupt you here. We're just moments away from the public debut of the first Bitcoin futures ETF in the United States. Proshares Bitcoin strategy will be trading under the ticker BITO on the New York Stock Exchange starting today. They've just rung the bell. So there it is, a big momentous event of significance in the crypto industry, the first Bitcoin futures ETF in the United States. There we have it. All right.
Well, our job is done.
Let's clap. Yay!
Yeah. Well, I guess we're done here. That's it?
No. Well, as Michele had said, that a Bitcoin spot ETF is still something that needs to be achieved. This is a crawl, walk, run, it seems, in terms of getting this ETF, Bitcoin-related ETF, across the finish line for the SEC. And so we'll see what happens with this Bitcoin futures ETF. If all proves to be, above board, perhaps they'll be more comfortable with introducing a spot ETF. And as Michele said, that Grayscale is looking to convert their trust into a Bitcoin ETF, and that would be the biggest fund to enter in the space if that were to happen. All right, Michele, we're going to wrap it there, but thanks for joining us. That was Marketgauge Group Managing Director Michele Schneider. All right, time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So FINRA mentioning virtual assets in a new regulatory notice on anti-money laundering and countering the financing of terrorism. What's going on here?
Yeah, FINRA's, good morning. FINRA's just another one of the agencies we've been tracking for a couple of years. And notice was from earlier this month and basically is saying that cryptocurrencies remain on its radar. It's advising businesses in this industry to ensure they have, appropriate know your customer controls and processes to remain in compliance. And, you can kind of see this as part of, I think, the broader U.S. government push right now to ensure that, all these businesses have the KYC controls that regulators believe they need to tamp down on different crimes using cryptocurrencies. Ransomware being, of course, the big one that's been drawing a lot of attention over the last couple of months. But, FINRA in particular has been active in this space for quite a few years now.
Are they offering any suggestions on how that can be done, or are they just reiterating what they've said many times?
It looks like a reiteration. There wasn't, too much detail, but I imagine we're going to see more to come. And also, I would imagine the companies are going to hear more directly themselves.
All right. Thanks for the update, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The United States inching ever closer to inking stablecoin regulation. The question now shifts from how will the U.S. government regulate stablecoins to what will stablecoin issuers have to do? Joining us now is Teana Baker-Taylor, Chief Policy Officer at the Chamber of Digital Commerce. Hello there, Teana. So you've written to the President's Working Group on Financial Markets, which is led by Treasury Secretary Janet Yellen and major financial regulatory agency heads tasked with monitoring U.S. financial markets. They're trying to come up with a national regulatory framework for stablecoins. So what were some of your key recommendations?
Thanks, Christine. Yes, we did write to the President's Working Group. They are looking at regulatory treatment for stablecoins, but notably there wasn't a public consultation or industry consultation period, which typically would be associated with activities like this. So we took it upon ourselves at the Chamber to write to the working group directly to ask them to consider some key things that we think are imperative. One, really reiterating that stablecoins are already heavily regulated in the U.S. If there is improvements to be made, that would be around streamlining state-level regulatory approaches in a way that kind of takes the best practices from those states that have already kind of paved the way, ensuring that stablecoins are categorized, as payment instruments and not as investment products. We'd like to see some simplification for stablecoin tax treatments. And if there is an appetite to do something at the federal level, we would like the working group to consider special purpose charters for stablecoin payment systems that meet certain regulatory requirements.
Teana, it struck me that you said it hasn't been more of a public conversation. Why is that?
I think that there has been a number of regulatory considerations across crypto assets over the last 6 months. We've seen quite a lot of activity, a number of bills posed, a number of agencies at the federal level taking action or putting out statements. And I think that the President's Working Group has been tasked with kind of bringing all of these agencies together. We've seen different statements made that the administration expects that these agencies work more closely together. So I hope that this is just the beginning of the conversation around how we're going to treat stablecoins within the U.S. And that we're not, expecting any type of prescriptive guidance to come out, which we don't expect.
Shannon, do you favor any regulation at all of stablecoins? Does the Chamber favor any regulation at all of stablecoins? Regardless of whether or not they're in place now. I mean, would you rather there be none?
No, I don't think that that's our position. I think that we. Why? Well, because stablecoins really kind of are enabling that gateway or that bridge. They're bridging the gap between traditional payment systems today and that legacy payment system and in the future innovation of payment systems. And so, if you're operating kind of within those payment systems, I think that there is a strong case to be made that there does need to be some level of oversight. However, the level of oversight that we have now is actually quite effective. And so we're encouraging that we look to the state practices to see whether or not there are any gaps. I think the other area to consider is whether or not stablecoins pose a systemic risk. And we believe that today they do not. So there is an argument to be made for, regulation that is, fit for purpose, and that is based on risk. And if you're looking at the stablecoin situation today, we don't want to overregulate based on the level of risk.
Just wanted to bring up an issue that now seems like it was light years ago, but actually was quite recent, which was all the commotion over the infrastructure bill, right? And this crypto tax provision that was supposedly so deadly for the industry. And as far as I know, that language, the controversial language, is still there. I mean, we haven't actually changed it. We don't really know what's happening with it. But can you just tell us a little bit about the status of this? Because there were people in the crypto industry warning that if this language went through, it would be kind of like a disaster for the industry. Now that language seems like it could still go through. So what does that mean?
Well, so we're in a bit of a holding pattern because, as you know, the infrastructure bill has not come up for a vote yet. So you are correct that language does still exist. We did see a colloquy in the Senate, which basically was a documentation of the intention of the bill, which addressed the issues that we had around some of the language around miners and validators, specifically being responsible for some of these reporting requirements. There are other initiatives being undertaken throughout the industry to look at potentially amendments to that bill that might go into other legislative efforts further down the road. And so at the moment, we're waiting for that bill to come back up for the vote, which it has been delayed. So you're right. We're still in a holding pattern.
All right.
So Teana, you mentioned before that you didn't think that the stablecoins posed any risk right now to the financial system, but if reports are correct that they've been issued against assets that aren't that aren't actual dollars, doesn't that create a potential for stablecoins to be issued against other assets, against other, let's say commercial paper in companies, and end up creating that financial risk to the overall economy if essentially you're printing money with stablecoins? Aren't the regulators basically trying to stop this from getting out of control?
So in our letter, we are addressing specifically U.S. Focused stablecoins intended to be, used in the U.S. headquartered stablecoin firms, and those types of payment systems. And what we're saying is that they're already well regulated at the state level, and that they don't currently pose a systemic risk. So I'm not saying they don't pose any risk at all. So your question around, the printing of money, most U.S.-based stablecoins are capitalized. And, we are looking at kind of proof of reserves and different types of activities to ensure that how they're capitalized is, in fact, that what they say they're doing is what they're doing. But unlike banks, the majority of them are not leveraged, and so the reserves are held entirely in cash or cash equivalent. So I think that's far less risky.
All right. Teana, thanks so much for joining us. Appreciate your insights. That was Teana Baker-Taylor, Chief Policy Officer at the Chamber of Digital Commerce. Also, taking a look at Bitcoin right now, it is now at 62,937, but just minutes ago, it was over 63,000, approaching $63,000, approaching the all-time high of just over $64,000 for Bitcoin. So that Bitcoin futures ETF certainly generating a lot of price movement, bullish sentiment for Bitcoin right now. All right, time to check in with Crypto Twitter with our tweet of the day. This one's from Charlie Morris, founder of crypto data firm ByteTree, tweeting, Bitcoin futures ETFs launched today. Roll yield has spiked to 70 17%, which means investors underperformed BTC by 17% on an annualized basis. So big arbitrage opportunity out there, but also it's only the beginning for Bitcoin-related ETFs out there. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin, as well as the CEO of Proshares. Coming up at noon is The Hash. You're watching CoinDesk TV.